Why in the world had I taken long on oil? Because price clearly spelled out that's what I should do based on the formations. But I also knew incredibly clearly to expect selling pressure at 101. The reason why I take in long, because my danger zone and my guiding light 1 hour had been reached. And pay attention to what happens with this adorable long on 8 when danger zone is reached. Ouch! Collapse, very sudden and very volatile. Know your levels, know where danger zone is, know where to take profits off the table. Target 1, target 2. Formula remains the same. It doesn't matter if you trade weekly or monthly. Monthly short was from this level. Know your levels. Very critical and very precise. Doesn't matter what time frame. And that's precisely why I'm watching S&P so carefully. And by the way, let's stay on oil before I get overly excited. Based on weekly chart, oil is heading to all the way down to 96, south. So those of you who are position traders, you've been short for a while now on monthly chart, but weekly is giving us confirmation of the powerful downtrend. In trading room, I simply trade range charts because I get plenty of opportunities. Clear? Adjusting my stop at break even. There is only so much pain I can take. Oil had assumed personality of S&P, but as you saw a couple of seconds ago, it's a picture-perfect reminder. Oil ain't for newbies. Execution, speed and volatility is the key. And why? Because it's got no liquidity. 800 contracts is actually the highest volume I've ever seen. Typically we see about 200, 300 on a range chart. This is very high. What is this telling you? Serious selling pressure. Let's look to the upside. Only 400. Downside 900. Currently 200. Do you see the fluctuation? Do you see how not liquid oil is? Do you see the reason why most of our graduates trade S&P? Take a look on liquidity. 12,000 on only 5 range. Do you want to be part of institutional volume, or do you want to be part of few retail traders? 200 contracts versus 25,000. And if I would take a look on SES 8 range, I would have 42,000. 42,000 versus 200. 2,000 times, 200 times, 2,000 times, no, 200 times higher volume. Absurdly high. Solid, straightforward. Just be prepared, test it for patience and discipline. But lately, oil had been slower than ES due to the recent events. And we had been watching ES fly. Those 12, 19-point rounds had been incredible blast. But don't be fooled. We are at the most critical levels in the market structure. We had been on S&P in 5 years. This is a long on S&P monthly chart. If you know how to trade alpha wave trader method, you also know how critical 1728 level is. The formula remains the same. Pay attention what S&P done at decision point 1, decision point 2. Collapse, first time danger zone had been reached, and this is incredibly critical. All the levels drawn, 2009. We are out of oil for all the reasons we expected. Danger zone had been reached. Know your levels. Know where to monitor for reversals and where to expect your trade exhaustion. And if you are not a experienced trader, don't trade oil, pretty please. Practice and learn on S&P. Double your demo account, add lot size. Only after you master S&P, feel free to add oil if you need to be entertained.